surge is being borne by businesses, not consumers. And unless the consumer gets more aggressive, it's unlikely that finished goods will soon inflate, at least appreciably. In fact, the world's largest retailer, most of you have probably read, Walmart, is dropping the prices on 10,000 items. That's not inflationary. And they're not doing that out of the goodness of their hearts either. So this is a deflationary tendency. One factor that leads many to expect inflation is the surge in the price of gold, seen over on page 14. This goes all the way back to 1980. The huge surge in gold, which you don't see on this graph, hit about 800 right back here, right about on, you can just see lines going up. It's right about on that edge. And then we saw gold prices come down, reached a bottom at about 250 in 1999. And then since that time, we've had a really strong move up in gold to about 1,200. It was up very big yesterday with all the turmoil. Down a little bit early today. Didn't notice it when I was walking out the door, so I don't know exactly what the last price is. And many people look at gold as a forecaster of inflation. And it might be that. But it is also other things. And I suspect that a significant part of that move is more than just an anticipation of inflation, but rather is an expectation that there will be problems with paper currencies. And we're seeing that all over the world right now as governments are trying to inflate their ways out of the various economic problems that they've been faced with over the past several years. So the gold increase may be more than a forecaster of inflation. The next page shows a broader list of commodities that doesn't show the same pattern as gold. And there's really no clear commodity trend. I mean, you can see ups and downs. You see the tremendous spike here, the tremendous decline in the recession here, and then the bounce. And of course, we talked about crude good prices. It's similar to this. It's a big bounce, but it's off a terribly depressed base. And that's actually true of an awful lot of business statistics right now. If you just, this is half second off point. But if you look at business statistics right now, and if you concentrate on what the bullish analysts are saying is, look at the rate of growth. They're up 46%. They're up 52%. That may be true. And it's important to look at rate of growth. But then look at the level as well. And you find in a great many instances, the rate of growth is terrific. The level is still very depressed. Because the rate of growth is off such a depressed base that it's still not good, even though it's grown quite substantially. And I mean, you see, this is not atypical of a lot of business graphs. In fact, this is even more bullish looking. Many business graphs will have this decline down to here, and the bounce will be up to here. So you see the rate is good, level is still in many instances not very good. And one thing about commodities, by the way, this is a broad commodity base, CRB index. This commodity index has a pretty good correlation to the Chinese stock market. You know, Chinese are buying an awful lot of commodities. And it might be ominous for commodity prices because the Chinese stock market, and maybe just a correction, can't know, is down more than 20% from the lows of 6-8 months ago, and down still more than 50% from the lows back, from the highs back in 2007. So the recent decline, if it translates to commodities, could indicate possibly that commodity prices may lose some of their recent strength. Oil on page 16 shows a similar recent pattern to that of the CRB index. No clear oil trend. Big year-over-year bounce, but off a multi-year price low. So you can see the low came back down to where it was a few years ago, but we've had a heck of a good bounce here, no question. Now, oil prices will probably move more in concert with the rise and fall of the world economy. So we're seeing, so far at least, we're only seeing grudging growth in the economies of the developed world. Far more growth in the emerging market countries. And but the question I have fully recognizing the strength we're seeing in emerging markets is, will they be strong enough to lead a world economic recovery? They've never done it before. Is it going to happen now? Maybe it will. Some of them have certainly gained critical mass over the past decade or so. So they are now in a better position than they have ever been before to be a leader in economic growth. But till proven, you always have that question. Are they going to be able to pull the carriage when the developed countries are still very much slogging through the mud, not working with great efficiency? Many of them are now starting to experience inflation, and so it's very likely that even though they've shown a great amount of government stimulus leading up to this point, many of them may have to start tightening their monetary policies, which will almost inevitably start to slow some of that economic growth. And whether they'll still be able to continue to lead with that tightened approach, I don't know. I think that's still an open question. China has been aggressively stimulating its economy for the last few years, and bubbles may in fact be growing there. This is taking a look at China property bubble. A prime sign of a real estate mania in many countries is a surge in the price of retirement or vacation homes. And the bottom of this graph shows U.S. prices. This is broad U.S. real estate prices, but then this is Miami and Las Vegas prices of retirement and vacation homes. Obviously, those are popular destinations for retirees and vacationers. And our cycle of real estate prices clearly ran ahead of China's. And here we see China. The general prices are still nowhere near as elevated as ours became, looking at different scales here. But what you see is, and this is two cities on Hainan Island, which apparently is one of the very popular home and vacation home and retirement locations in China, and you can see that the prices there have just absolutely skyrocketed over the past year. And their overall real estate cycle is not as developed as ours became, but those two cities certainly send out a warning that perhaps there is a bubble brewing in China, and it could be a problem over the next couple of years. But so these are factors that look inflationary for the most part. But there are a number of factors leaning strongly against inflation as well. If you look over to page 18, foremost among those is the persistent severe unemployment problem. And by the way, many of you may not have heard it, but they did have another employment announcement this morning. There were, I think it was 290,000 new jobs created today. Not as many as people expected were because of the census hiring. I think it was only like 66,000. So in fact, there were more legitimate jobs created if the numbers are to be believed on the surface, although the unemployment rate went up from 9.7 to 9.9, and that's because a much larger number of people came into the job search workforce, in a sense. So we've got a higher unemployment number, but we have more people going back to work. And then there's also the question is called the birth-death. It's a kind of a formula, and a lot of people are doubting a lot of the employment numbers because birth-death refers to businesses, business birth, business death. And if you think of it, if they're relying on past history, we're not getting the birth of a lot of new businesses right now. We're not getting as many new businesses being formed in this recessed economy